I'm Matthew Galgani with the Daily Stock Analysis for Thursday, August 4th. Today we'll look at Under Armour, ticker UA. It markets athletic clothing and footwear, and its stock has made a nice run over the past 2 years. But with the market now in a correction, it's important to look out for sell signals, and Under Armour has been flashing some warning signs. When it comes to buying a stock, you want to focus on both fundamentals, like earnings growth, and the chart action. But when it comes to selling, focus mainly on the chart action. That's because earnings and sales numbers often still look good, even as warning signs begin to appear in the chart. Under Armour is a good reminder of that. Late last month, the company posted second quarter results that trounced analyst estimates, climbing 71%. That marked the third straight quarter earnings growth has accelerated. Sales also topped estimates, rising 42%. As we'll see in a moment, the company's shares got a brief boost on the results, but then reversed lower as investors focused on news that its gross profit margins shrank amid higher material, labor, and freight costs. Looking ahead, analysts see earnings rising 34% this year and 26% next year. The stock's up-down volume ratio is 0.9. That number compares the volume on up days to the volume on down days. Readings below 1 show there's been some selling among big investors recently. This daily chart shows how Under Armour broke out of this cup with high handle base on July 19th. The ideal buy point of 81.62 was calculated by adding 10 cents to the 81.52 peak in the handle. But volume was only about 28% above average as it made that move. You want to see volume at least 40% above average as a stock breaks out to show that big investors are buying. Under Armour lost ground in the days after its breakout. Then on July 26th, it jumped higher after posting its latest earnings results. But as investors focused on its shrinking profit margins, the stock suffered a hard reversal and fell lower. Keep in mind, too, that the overall market was weakening at this time. And as you can see, volume jumped to its heaviest level in months. That was a warning sign that some big institutional investors were selling. Plus, the stock dropped 7% below its 81.62 buy point, triggering the most important defensive sell rule that says you should always sell if a stock drops 7 to 8% below what you paid for it. Investors who cut their losses short at this point would have avoided the damage that came later when the stock dropped below its benchmark 50-day moving average line this week. Switching to the weekly chart, here's something else to be aware of. During its run, Under Armour formed these 3 bases. That meant its most recent pattern was a late-stage base, and those have a greater risk of failing. One housekeeping note. For those of you who read the print edition of the DSA in the paper, the title of that feature will be changing to IBD Stock Analysis. It'll only feature stocks that are building solid bases or are ready to break out. So it'll be focusing on the stocks with the strongest potential. Note that on days when no stocks meet those requirements, the IBD stock analysis feature won't run in the paper. But we'll continue to bring you the daily stock analysis video each day, and we'll still feature lessons on both buying and selling to help you hone your overall trading skills. That's the daily stock analysis for Thursday, August 4th. Thanks for watching.